What's going on, everybody? Welcome to Own the Chaos. My name is Brad. Good morning. It is Wednesday, March 22nd, 2023, and the markets right now are pretty much flat. Looking at the S&P 500, it is down around 2 points. Dow is flat. It is up around 4 points, so really nothing to see there. NASDAQ is down 15 points. Again, not really much to see. It's down 0.1%. We're not talking about much here. The Russell is the same situation. Looking at Bitcoin, that is up 18 points. So really not a whole lot of movement anywhere. Now, why is that? A lot of investors are just hitting the pause button as we await the Fed's decision today at 2 p.m. Eastern time, which, by the way, I will be live for and reacting to as soon as we get that number. So make sure you're hitting that subscribe button, hit that notification bell, as I will be live for that as well. And guys, thanks so much for tuning in. Let me get my starting five shouted out here. What's up, Biker Brian, Philip Stroh, Savvy Money Show, Kevin Hawthorne, and Dominic Bickford. You are my starting five. If you missed the starting five, it could be because you haven't hit that subscribe button or that notification bell and gotten here early. So make sure you're doing all of those things, and you just might get shouted out in the next stream. Guys, what's going on? You know, GMC Boom, who's sipping coffee? Your boy sipping coffee. But yeah, guys, it's going to be an interesting day. It should be fun. We'll see how it all shakes out. But so far in the poll, a lot of you guys are thinking that stocks are going to go up after the Fed meeting. Nobody so far, and it's early, we'll let this roll on, but nobody so far thinks that that stocks are actually going to drop, which is very interesting. You know, we've seen a very volatile last couple of weeks, meaning that we've seen markets go up and down like crazy, and it has been pretty wild to see, to say the least. So I'm hesitant to say that, yeah, stocks are just going to go straight up after this meeting, but I think it's going to more or less depend on what we see from the Fed. So I'm going to give you my thoughts on that in just a moment. Also, make sure you're staying tuned for the weird news coming up in about 20 minutes. And then also birthdays we have towards the end of the show, of course, as well. And we have some other things that I would like to talk about, just from the tech side of things, and then also where I think it's worth moving money towards, depending on what happens with the markets in general, or what happens with the Fed in general. Also, I want to talk about the 2023 Dodge Demon. Lord Fenrir's not here. Hopefully he shows up. But he brought this to my attention earlier last night, and I was just like blown away. Obviously not stock related, but sometimes, listen, we just got to make a left turn every now and then. No pun intended. And yeah, so we'll talk about it in a moment, but man, so I looked at many major media outlets this morning, and they all had the same theme. Now, let me preface this. I'm gonna go through all of the titles. I'm gonna explain to you why they think how they think. So Wall Street Breakfast, Seeking Alpha, simply titled their morning podcast "Fed Dilemma." All one word. And then Yahoo Finance on their front page. Jerome Powell has an obvious problem with no easy solution. And then you got CNBC. The Fed has ongoing increases to be appropriate to something suggests less than certain outlook. Then you have Barron's. The Fed Reserve is in the hot seat. Inflation, banks, rates, and more. Obviously, generally speaking, across many media outlets, everybody's kind of like in a consensus here that the Fed is in trouble. And so why is that? Well, you have this issue where the Fed either has to save the banks or face economic blowback. But at the same time, they have to continue to tighten because of inflation. So that's the rock and a hard place that they're at. If they continue to raise rates, it continues to put stress on the banks, which then forces them to bail out and raise the balance sheet and that doesn't really help the inflation issue, right? And so that's the big problem. That's the big conundrum that the Fed is facing. Now, general consensus is that the Fed's going to continue to raise rates, and that this today that we'll see 25 basis points. That's kind of consensus across the board, whether you're bullish, you're bearish, what have you. There is really not too many outlets that are saying that we're going to see a cut, which I don't think that's happening. If we see a cut, the market's crashing, period. Or we see a pause. I think that for me personally, I'm not ruling out the pause. I'm not ruling out a rate pause. If the Fed just says, hey, we're going to stop because some things have broken and we kind of want to look around and assess the situation, I think that makes perfect sense. And I think that that's something that should be considered. I'm not saying that that's exactly what's going to happen. I think that it could, and I'm still in that camp of like that's what I think personally. I think that they're going to pause while everyone else thinks they're going to continue to raise. Now, granted, we saw Canada raise their rates. We saw the ECB raise their rates 50 basis points, by the way. And now, the pressure's on the Fed. So we'll see. According to Fundstrat, the Fed's path has changed, and there's no question about this. Tom Lee of Fundstrat put out this morning a piece that says at some point in 2023, the Fed was expected to take rates to 5.5% or higher. That was as of December 2022. And this has now tanked to 4.365 by year end. That's a full 110 basis points lower and below the current Fed funds of 4.58. So that's where we're at right now. We're at 4.58, and we're seeing expectations of Fed funds rate to go down to 4.36 by year end. That would imply that there's a potential cut. Now, why is that? With the fullness of time, we expect this to become more than responding to the bank crisis, but rather the trajectory of inflation has legged lower. So Fundstrat is making the argument that it has nothing to do with the banks necessarily. The banks, of course, are a consequence of what's happening, but it's actually inflation itself. The regional bank crisis will tighten credit. The startup disruption is hurting job growth, and focus on bank stability means consumer focus on inflation is arguably dead in its tracks. And I agree with that. We take a look at the landscape, and I've been talking about this over the last several months when we've been seeing this huge tech layoff, right? And now we're seeing the bank struggle. Silicon Valley Bank has hurt a lot of startups, which hurts jobs, and it's a trickle effect, a ripple effect. We start to see that take place, and then the Fed has done a lot of work. Like the rising of rates has actually worked to a certain extent. Now, has inflation been fixed? No, absolutely not. We just saw 6% year-over-year inflation this past February from the February report, and of course we'll see what happens in March. But inflation has come down a lot, and even if you look at real estate right now, mortgage demand has gone up slightly, 2%, but that's after a 36% drop in demand in housing. Not to mention that interest rates are climbing right back up as well. They decreased to 6.4% from 6.71, but now are going right back up. 30-year mortgage is getting up and upwards of 7%, which is crazy. I don't know how anybody buys a house right now. I really don't. I mean, the mortgage you're going to pay on a $250,000 house is the same mortgage that you would have paid on a $500,000 house 2 years ago. And it's like, how do you justify buying a house right now? Help me make sense of that. March Madness of the Fed, says Milton Williams. Yeah, absolutely. Ryan Holmes says, do you see the bank crisis having an effect on the markets like 2008? Asks Ryan Holmes. That's a great question. Absolutely not. I don't think that we'll see anything like we saw in 2008. The banks were just, back then, the banks were doing whatever the hell they wanted. Subprime mortgages, people handing out mortgages to people that couldn't afford them, was obviously a huge mistake. I don't think we're ever going to see something like that ever again. I lived through 2008 and I know what it was like. And it feels nothing like that right now. And look, I mean, by and large, stocks have been resilient. I mean, think about everything that the stock market has had thrown at it. And we'll take a look at here's a look at the SPY chart. The S&P 500. This is your daily chart on the SPY. And actually, I want to take this a step further and take a look at the weekly chart. So let's take a look at the weekly here. And you know, you've heard me talk about this for quite some time on the weekly that we've seen a decent uptrend. And obviously over the last couple of weeks, because of the banks, it's kind of mucked up the chart a little bit. But this weekly chart, for everything that the stock market has had thrown at it, this has been pretty resilient, right? Technically, we're still at higher lows since October. And if you think about higher interest rates, banks failing, two of the largest banks since 2008 have failed, and inflation's running rampant, yet stocks have remained resilient. And I think that there is good reason for that. I think because the worst is certainly behind us. Here's the other thing that I thought was interesting from Fundstrat. And he was talking, and Tom Lee was talking about sentiment. And this was a bit of a mind-blowing number to me. He pointed out that sentiment is terrible, so bad, so even bad could be half full relative to positioning. And he's talking about the Fed meeting today, that even if we get 25 basis points, stocks could still rally. The latest Bank of America fund manager survey shows equity allocations absolutely tanking. The net percentage of U.S. equities is lowest since 2004, even lower than the great financial crisis. So sentiment is worse than when it was in the great financial crisis, and it's at its lowest since 2004, which was post internet bubble. So that is pretty wild to me. So this could very much be a situation in which it's so bad it's good. Sentiment is bad, but when it's bad, this means that bad news may not push down equities due to positioning. For those who say stocks are expensive, let's remember that if you take out the FANG stocks, the S&P 500 is sitting at 14 times next year's earnings. There's hardly anything to dismiss. So stocks are cheap, especially if you take out tech, the major tech stocks, FANG specifically. Checking in on some of the comments here. Philip Stroh says Australia did a pause. I mean, Australia is Australia. I don't know if that would be anything that we could compare to here. Mixed Mist says, I hope they pause, but I doubt they will. Yeah, that's kind of the camp that I'm in. A rate cut would be bullish short term, bad long term. Danny Alvarado, I don't know, man. I think I disagree. I think people will freak the hell out if we see a rate cut right out the gate. If the Fed comes in and says, hey, we're going to cut rates 25 basis points, the market's going to be like, well, what the fuck? Why are we cutting rates? Is the economy doing terrible? Are we that bad off that we have to cut rates again? Are we seeing that recession actually take place? So in my opinion, I think that if we see a cut, that would be super bad for equities. I don't think that would be good at all. Jason Barub says he thinks that the Fed's going to raise rates. Danny Alvaro says buying a house wouldn't be a bad idea. There's no demand here, so you can offer a lot less of asking price. And yes, interest rates are high, but hopefully they drop in 2 years by half so you can refinance. Yeah, it's a big hope. You know what I mean? Like, I feel like renting, at least in the short term, like if you just rented for a year and still saved up, if you still could rent and save money. Because think about this, right? I'm paying double what I would have paid in my mortgage 2 years ago. But then I also have to take care of anything that breaks. I have to take care of whatever, property taxes, that sort of thing. If I'm renting right now, at least in this area, the average rent per month around this area that I'm in Mooresville, North Carolina, is around $1,800, give or take. And to rent or to buy a $250,000 house, it's like $2,000 a month, plus all the other shit that comes along with it, right? But if I wait a year and see if interest rates come down, that's kind of where I'm at with it. You know what I mean? I don't have to worry about fixing my water heater. I don't have to worry about any of that stuff in the short term so that I can save more money and hopefully interest rates come down. I don't have to worry about refinancing and all that BS. Not to mention that we are starting to see rent come down somewhat as well. UK is expected to raise on the 23rd. I think there's a lot less risk when it comes to the UK and some of the banking issues. You got to remember, the U.S. has more global banks than anywhere in the world. So if global banks here start taking a dive, start taking a shit, then it ends up affecting everybody. The worst thing of it all is to finding a house at $250,000 in Florida where I live. Yeah. And as far as housing demand's concerned, Danny Alvarado, maybe it's where you're at, but across the country, housing demand's still quite high, which is also crazy to think about. Okay, so let's talk about this for a moment. Make sure you're sticking around. In about 5 minutes, I'm going to cover the weird news of the day. You're not going to want to miss this. Man, criminals are dumb. That's all I'll say about it. So make sure you're staying tuned. And in about 5 minutes, we're going to cover the weird news of the day, just to break up finance talk, right? Sometimes it's just fun to just break it up a little bit. So that's what we're going to be doing, the weird news of the day. And that is your hint, that criminals are dumb. But what do we do in a situation where, like an if-then situation? And I actually talked about this within my Chaos Crew folks over at our Patreon, at patreon.com/ownthechaos. Go check us out over there. You're going to get trade alerts from my trades, from Don's trades. You're going to start to see me make trades again, and as well as watch lists, exclusive content, all that stuff's over there. It's starting at $5 a month. You get access to our Discord as well, which is invaluable in my opinion. Go check it out. The link's in the description. Help support the channel in that way. Help me continue to build and grow content in that way. And would love to have you guys a part of the efforts and a part of the community. It's a great thing. So after the Fed meeting, stocks will. This is a poll that I put up here in the chat. Stocks will rise, stocks will fall, or stay the same. And so I thought, well, what do we look at in either of these situations? So I think that if the Fed comes in and doesn't raise rates at all and starts to turn a little more dovish, then tech is going to continue to be king. So if we take a look at tech in general, I think Microsoft is a good example. If we just go look at Microsoft, and these are Don's charts and Don's zones that I've been starting to learn and kind of get a hold of. But you look at, this is Microsoft right now. This is a weekly chart. Look at Microsoft's giant boner candle last week, a 10% move in Microsoft. And it's given back some of those gains, but not much. I think that tech's going to still rally, and more specifically, small cap tech. So you can go and look at your Meta platforms, your Amazons, your Googles, Apples, the FANG stocks, Microsoft, and you could be fine. But greater opportunities lie ahead. I think CrowdStrike, for one, could certainly be in the mix there. CrowdStrike's starting to push up above this zone on the weekly chart, and it is expensive. Make no mistake about it. It is very expensive. If we take a look at CrowdStrike's PE, it is sitting at 58 times next year's earnings. But the growth here is extraordinary. They're growing 55% year over year, and the profitability is also at 73%. So that's why there's a premium on this. So don't let anyone tell you that, oh, well, it's expensive, don't touch it. Just because it has a high PE doesn't tell you the whole story. Excuse me. So I think that CrowdStrike is one of those smaller cap tech stocks that are going to do extremely well. And you can see that it already has since January. It's largely in part to its latest earnings, which knocked it out of the park yet again. Year to date, the stock is up 30%. But if the Fed comes in and says, we're not going to raise rates, we're going to pause. We're going to just kind of assess the situation, see where we're at. Then tech stocks are going to continue to rally. You could look at something like a SoFi, for example, also in that small cap tech space. Oops, not SoFi. SoFi. I think SoFi is going to do well in this environment. It is part of the banking, but I think also this is something that makes sense. A small cap tech stock. You could even look at a Square or Block, whatever the hell you want to call it. It's always going to be Square to me. I'm never going to get used to that. Square's been doing well since October, and I think that's going to continue to push up. We could take a look at the valuation on Square, and it is not really all that expensive anymore. It's much more attractive than it used to be. It's still on the high side, of course, but you can't take away from the fact that it's up nearly 20% year to date, but it's still well off of its 52-week highs. It's down 42, almost 43% from its 52-week high still. So there's a lot more room for this to run. And if the Fed comes in dovish, that's good for tech in general. Why? Well, if most of tech, especially the smaller cap tech stocks, rely on government loans to continue to grow, and loans in general. And if you need a bank loans use the Fed rates as a template. And so this is going to kickstart tech stocks back, and I think you're going to see this huge shift. We've already started to see that, of course, but I think that continues. And feel free to give me you guys' thoughts on this, but I think tech continues to do extremely well. Not only that, but Bitcoin also will do well. Why will Bitcoin do well? One of the big reasons why Bitcoin will move is because of the U.S. dollar. If the Fed starts to become dovish, and then we could see Bitcoin continue to do really well. The dollar will weaken if the Fed stops raising rates and starts to become a bit more dovish. And then Bitcoin has kind of really been the inverse of the dollar. So the dollar starts to weaken, and Bitcoin's going to continue to push up. Right now it's up slightly, but it's sitting up at levels that we haven't seen since almost a year ago. And so this is very interesting, a very interesting spot. And actually this 28,000 mark is a resistance for Bitcoin. So if this moves up, this is going to be all systems go, I think, for Bitcoin to push back over $30,000 per Bitcoin. So keep an eye on this as well if you guys are looking at Bitcoin. As far as the rest of crypto, I'm not quite sure about, but Bitcoin's definitely going to move if the U.S. dollar starts to weaken on a dovish Fed. So that's something that I would also consider keeping an eye on. Let's not forget about the banks either. The banks, I think, are also going to do well. Bank of America, we talked about this a little bit yesterday. A lot of depositors are flocking to quality banks. Bank of America is certainly in that mix, and it was up 3% yesterday. So this is going to be a continuing theme, I think. So if the Fed becomes more hawkish, though, watch for tech to not do well today. The banks are still going to be stocks that I would go after. You can even take a look at some health. If the Fed comes in hawkish, the XLV healthcare could be something that I would certainly look at. United Healthcare, what have you, Humana, all that's I think is going to probably do well on a hawkish Fed. So just keep an eye on that. It may do well anyway, but the XLV is an ETF that I certainly would check out if I were you guys. Not saying you got to go that route, but certainly worth taking a look at. Quality or big banks? Well, most of the big banks are quality banks. Darren Anderson says, I got lucky on my house. The house is valued at $500,000 and I'm paying right at $2,000 a month. We bought the house 2 years ago. And Darren, that is exactly what I'm talking about, right? Like now you can buy a house that's half that value and still pay $2,000 a month, which is insane. To me, I just can't justify doing that. Okay. Bodie Beard, it's all about the BTC. Don Fron from the Don Fron Show says these charts are beautiful. Yeah, we already talked about that earlier, man. Should have been here. What about Coinbase and Nike? So we covered Nike yesterday on during our reaction. So we take a look at Nike, and this is looking pretty damn good. I don't know why it's down this morning. I really don't. But their earnings were fantastic. I mean, they came in revenue and almost beat it by $1 billion versus expectations. They smashed earnings as well. I think Nike will be a buy. I don't know why it's down this morning, and we started to see that kind of move down yesterday. I really can't explain it. So I think this is more or less of a buy the dip type of situation. Watch it push up to this zone here and see if it pushes through or if it gets rejected. Just be on the lookout for that. If you guys want to get access to these zones and to these charts, make sure you go check us out over at patreon.com/ownthechaos. These are custom-made charts by Don from the Don Fron Show. You just saw him show up in the chat. And it starts at $5. You can't beat it. Can't beat it. You get access to my shit. You get access to Don's shit. And it all starts at $5. My morning is full of herding cats. I hear you, Don. Just in time says, am I a piece of shit for thinking about buying some GameStop right now? No, you're not. But I still think that I would stay away from GameStop. All right. As promised, I don't want to get away from my schedule here. As promised, we get in the weird news of the day. Okay? We're going to start with this hole in the wall. And let me explain to you how dumb criminals are. Here's your weird news of the day. 2 inmates in Virginia jail used primitively made tools to create a hole in the wall of their cell and escape, only to be found hours later at an IHOP restaurant nearby, according to the local sheriff. Authorities discovered the two men, ages 37 and 43, missing from their cell in Newport News Jail Annex during a routine head count Monday evening, according to a statement from the Newport News Sheriff's Office. And a preliminary investigation found the men exploited a weakness in the jail's construction design and used tools made from a toothbrush and a metal object to access rebars between the walls and then use the rebar to further their escape. The statement said that after escaping their cell, they scaled a containment wall and then around the jail. Authorities had asked for the public's help to find the men, and they were taken into custody again early Tuesday at an IHOP in Hampton, where the patrons called police. It reinforces that we always say, this is a quote, see something, say something. This is from Sheriff Gabe Morgan. And the sheriff's office said that it is investigating to help prevent further escapes. One man who lives in Hampton had been in custody on charges including contempt of court and probation violations. Another in Gloucester resident was held in charges including credit card fraud, forgery, grand larceny, and probation. Well, at least they weren't murderers. Charges related to the escape are pending, according to the sheriff. I mean, how dumb can you be? You're finally free, and then your ass goes to IHOP. Patrick Higgins says they needed some damn pancakes. God. You know, like Gloucester. Is that how you say it, Jason? Thank you. I know I butchered the shit out of that. Never thought that story would make national news, according to Jason Batts. Or this is from Jason Batts. Jason, you must be from the area. Yeah, that's pretty dumb. That was from AP, the Associated Press, Jason. So congrats on that. Just another example of how criminals are just dumb. I don't understand. If I freed myself from jail, I'm not going to be so stupid as to go to the local IHOP where everybody can just see my face. Right? Don says they should have grabbed a bite to eat and then went back just to explain it in court. It was just real quick. The food here sucks. Yeah, no shit. Oh, Jason works at that jail. What a fucking small world. No way, Jason. Oh my God. That's hilarious. Well, hopefully it wasn't on your watch, Jason. Hopefully it wasn't on your watch. There's a CSX coal marshaling yard about 200 feet away. That is crazy, man. That is crazy. That's so funny. This is why I love YouTube. This is the absolute reason why I love YouTube and why I love just live streaming every day. That's so funny. Hit that thumbs up, guys. The market's officially open. Let's go ahead and check back in with the markets here. And I'll pull up a 5-minute on the SPY. Here's 5 minute. Whoop. Here's 5-minute chart. Whoop. Come on. Come on. There we go. So not a whole lot of movement there, obviously, just yet on the SPY, but we are slightly down, and this isn't really much of a different change. We saw pretty much flat movements in futures, and I would imagine that we're probably going to continue to be flat going into this Fed meeting, which, again, I will be live for to react to the Fed as those rates do come out. I'll go live at 1:45 p.m. Eastern time today, which will be about 15 minutes before the Fed will release their decision. And then about a half hour after that, after the decision, then the Fed will actually, Jerome Powell will actually make a statement and take questions. So then I'll be live for that as well. Would love for you guys to be here. So make sure you're hitting that subscribe button, hit that notification bell to get notified when I go live. And it should be a good time. Jason Batts, I still am my if my jaw could be on the floor, it would be. I'm still blown away at that. Hit that thumbs up if you guys are enjoying the stream so far. I certainly would appreciate it. Bob K, I'm going to be live at 1:45 p.m. Oh, Bob King. What's up, my brother? Bruce says, this is what I had hash brown eggs top. Oh, nice. 61 of you have voted on today's poll so far. Thinking that that stocks are going to rise after the Fed decision today. 26% of you say that it's going to fall, and 15% of you say that it's going to stay the same. Jason says, my Facebook feed has been nothing but my high school friends commenting about it, thinking it was a joke. That is hysterical, man. That is hysterical. Okay, the S&P, the SPY is starting to move down here a little bit. SPY is down now around 0.2%. And we're starting to see this sell off. Tech is doing pretty damn good, though. Here, take a look at Meta Platforms right now. Tech is doing quite good. Meta is up another 0.6%. Apple is also moving in the right direction, just barely in the green, but you can still see this buying volume starting to come in. Even Tesla's up, but we're starting to see that sell off. Bitcoin hanging in there. NVIDIA is starting to sell off now, giving back a lot of the, I mean, it went crazy right out of the gate, and now that's starting to sell off as well. Justin Time signed up to Level 2 Patreon. Hell yeah, bro. Thanks so much, man. Thanks for helping support the channel. That's amazing. We appreciate you. If you guys haven't checked it out, the link's in the description below. Justin, you're not going to regret it, my man. Go check it out. Help support us. And we would appreciate it. You get access to, I'm going to start making trades. And again, now that things have kind of settled down for me, and you'll see those in our Patreon, you're going to see Don's, as well as access to a lot of the charts, the custom charts that Don has made. And then also my watch list, my Stockwatch Sunday watch list that I put out every Sunday, access to exclusive content. We give you a ton of stuff starting at $5 a month. But Justin just went for it and got level 2. So we certainly appreciate you, my man. Let's go take a look at the weekly chart again on Bitcoin. Don was mentioning this. 31,800. I actually saw a little resistance here at 28,000 as well on that weekly chart, like right around here. So we'll see if this breaks over by the end of the week. If Bitcoin's over this 28,000 mark, then I think that the next stop will be that 31,000, 32,000 area. 31,800 is the next zone for Bitcoin on the weekly. All good shit. Bitcoin's starting to move back up here now. Checking back in on NVIDIA. Let's go back to the 5-minute on this. Here's your 5-minute chart on NVIDIA. Yeah, and we're starting to see that buy volume come right back. I think tech's going to rip. I think tech's going to absolutely rip. Anyways, I'm going to cut this morning stream a little short, guys, only because I'm probably going to be live for quite a few hours today. So how about we do this? I'm going to cut it a little bit short today, and then this afternoon I'm going to be live at 1:45 p.m. Eastern time, and I'll be live for probably at least 2 hours, because we're going to be covering the Fed rate hikes. We're going to be listening in on CNBC. We're going to be hearing from the Fed. We're going to be hearing from Jerome Powell. So let's go ahead and just cut it a little bit short, about 10, 15 minutes shorter than normal. And then it gives me some time to prepare and all that good stuff. But as promised, I'm going to give you birthdays today. And listen, we got a jam-packed, star-studded, and I mean star-studded list of birthdays today. And it all starts with Dave Portnoy. Happy birthday, Dave. He's 45 years old. Reese Witherspoon is 46. J.J. Watt is 33. William Shatner is 91 years old. And Keegan Michael Key from Key and Peele is 51. That is a star-studded list. And let's not forget about Jessie Andrews, who is 31 years old. And she's best known for Pull My Bush 3, Two Mouths to Feed, My Slutty Friends, Penny Thieves, and Young Toes Before Hoes. Guys, thanks so much for tuning in. I'll be back, and I'll be live at 1:45 p.m. Eastern time to react to the Fed decision this afternoon. And until then, guys, enjoy yourselves. Stay safe. I'll see you this afternoon. Love you all.